Welcome to our channel where we're going to provide expert advice on all things mortgage and finance related. So today, I am going to guide you through the process of securing an FHA loan to help you achieve your dreams of home ownership. So stay tuned as I unlock tips to a bigger mortgage and 10 tips for success despite bad credit. Let's all first start out with the basics. What is an FHA loan? FHA basically stands for Federal Housing Administration, and basically it offers a government-backed loan that is perfect for first-time home buyers or those with like lower credit scores. The minimum down payment is 3.5%, which is the key advantage of getting an FHA loan. And typically, in my world, in a more detailed why FHA is better than most of the other loans, it's because there's less loan level pricing adjustments, okay? So when you have those lower scores, you're not seeing a huge jump in interest rate. If we follow these top 10 things that I've kind of outlined, you're gonna be successful. So tip number one, it all starts with research. Research. Know what you're getting into, okay? Know the mortgage process. And it starts out with a simple conversation with a loan officer that you basically get along with, one that you trust. Look at the reviews, look at what the process is like so you're not disappointed. When I first got into the industry, one of the things that I used to send out all the time is basically the yellow brick road like Dorothy went through in The Wizard of Oz, right? Here are the steps. If you go from 1 to 20, this is going to be the complete steps of securing the loan. So you start out with the application, the quick conversation with the loan officer, getting all of your questions answered. So it's always good to write down all of your questions. I recently went to a doctor's appointment. About 2 days before I went to the doctor's appointment, this really helped out a lot. I started taking notes on my phone. So I was like, okay, I want to ask about this, and this. So when I got back from the doctor, for the first time in my life, I didn't say, gosh, I forgot to ask about this. So, really do your research. Know the difference between a mortgage broker and a mortgage lender. Make sure you know that there's a bunch of loan officers out there. There's almost 3 million NMLS numbers out there with different loan officers, and know that your loan officer that you're working with knows the process of an FHA loan, because if you don't do a lot of loans, it's not like jumping back on a bike and riding again, okay? It really is difficult. Guidelines change all the time. Different investors offer like different incentives at certain times. So do a lot of research, educate yourself. And the first step is watching this video and knowing what to look out for. Tip number 2 is to improve your credit score. Obviously, when we're doing a loan, we're doing a lot of different things, okay? We're looking at income, assets, and liabilities. How's that gonna help you? Obviously, the higher the credit score, the less risk it is from the lender standpoint. If you have a higher credit score, that equals a better interest rate. So things to really focus on to improve your credit score. There's about 5 things that all the credit scoring models look at. Paying your bills on time. That's number 1. Paying your bills on time is really important. As long as you don't have a 30-day late, I don't care how perfect your credit score has been. If you have that one 30-day late, it's going to tank your credit score regardless of where you are. I've seen people go from 800 credit scores to 690 overnight because of that current late or something that is past due. That is totally no bueno. Next thing to do is to reduce your debts, okay? Especially on revolving debts. Credit card debts especially are gonna be the quickest way to kind of improve a credit score. Last night I was talking to a consumer. They had a 630 credit score. I went into my system and I looked and I was like, okay, well, Mr. So-and-so, if you paid down both of these credit cards and it's only gonna cost you $130, it's gonna take the current credit limit and balance, which is over 50%, down below 50%. And what it's going to do is it's actually going to take him from one tier of interest rate, which is right around 7%, down to about 6.5%. Okay, so that's going to improve his credit score up over 650, and most of the loan level price adjustments are going to basically disappear and give him a way better interest rate, which in turn is going to save him roughly about $70 a month. And that's a huge savings if you look at it over 360 months on a 30-year mortgage. Always track your credit, okay? Always track your credit. Annualcreditreport.com is free to consumers. Always know what you have on your credit report. You have the ability to look at annual credit report or even get any of these credit monitoring apps on your phone, such as Experian, Equifax, TransUnion, and dispute all the errors that you have on your credit report, okay? Because there are errors, especially if you have a common name. It's really important to know what errors are there and to research and dispute. Getting some of these errors on your credit reports off is going to be a huge step, and it's going to greatly improve your overall credit worthiness when it comes to the lender's eyes. The next tip, number 3, is to save up money so you can put it into the loan, okay? You think about it, if you're gonna lend money on a house, which is what mortgage companies do, we look at you purchasing a house, let's just say for $200,000, and you put no money down. You have no skin in the game other than your credit. The more money you put down, the underwriter's gonna review your total file, and they're gonna say, you know what, with a larger down payment, or even a down payment, and the ability to pay some closing cost, or what we call cash reserves, which is the money that you have left over after you've paid for your down payment and closing costs, depending on how many months of mortgage payments you have left over, which is called cash reserves, that's gonna improve your chances of getting approved for a bigger mortgage, number one, as well as help you put down a down payment, which is gonna give you a better interest rate and a lower, monthly payment. So it all goes hand in hand. Definitely income, assets, and liabilities. Tip number 4 is consider working with a mortgage broker. I've totally talked about this time and time again. You should shop for everything that you get. I'm a huge proponent of shopping. You're shopping for knowledge and you're shopping for savings. And sometimes the most savings does not equal the best process. The reason I say this is, if you go out and you get an FHA loan, okay, and for instance, my company, we have over 220 different investors. And when we look at the FHA loan with the 220 investors, we're looking at a couple different things, okay? We're looking at the company, we're looking at the support at the company, and we're looking at how the process is for the consumer, because ultimately what it comes down to is we want to deliver a really good process, okay? So if you're getting the same FHA loan that 220 companies can deliver, you want to work with the company that's going to give you the less headaches, right? That's number one. That's where your mortgage broker is going to come into play. Your mortgage broker has the ability to choose the investor that they want to go through, and your mortgage broker can still save you money because a mortgage broker is wholesale versus retail. And on average, if you look at what Housing Wire put out last year, based on 2022 HMDA data, the average consumer saves between $8,400, which is the average consumer, to minorities saving over $10,400 on the same exact loan when going wholesale versus retail, because retail has a lot of middle level management that kind of overrides. And what happens is it results in you paying a higher interest rate. So shop with mortgage brokers and ask them, what is the most important thing to you? Products with a lower credit score, pricing with lower or better rates, or speed, okay? So always consider working with a mortgage broker and let them know what's the most important thing to you. Tip number 5 is really important. If you're looking to qualify for something bigger, you guys may have heard me talk about this in the past. And when my kids turn a certain age and they go to college and things like that, one of their first businesses that they're going to get into is owning properties. And I understand that my kids may be in college and they may only have a part-time job at the library at their college or something like that, but I'm going to be their co-signer. And having a co-signer is going to give them the ability to work with maybe less than ideal credit or lack of credit, and it's going to help them, with the strength of 2 borrowers, qualify a lot easier and have the ability to use my income to help my kids qualify for these homes, so they can put roommates in the house and basically for 4 years while they're going through college, or 6 years or 8 years, they can keep that house filled, have extra spending money, which is, cash flow. And then whatever's left over is going to go straight into the mortgage, which when they get out of college, they have the ability to either keep the home and keep it rented and continue to hopefully pay off that home, or they have the ability to sell it, take that money and put it into the home of their dreams when they find their life partner. Tip number 6, shop, right? We talked about this. This is a huge tip, shop, because Now, once again, it's really important. You're the one that's going to have to live with this 30-year mortgage. 30 years equals 360 months. So if I was going to live with something for 360 months, potentially, if you don't refinance, I'm going to shop because, yes, I may really, really like the loan officer that my realtor gave me, but if you get a hold of someone like me, I'm going to definitely shop for you, and I'm going to give you 120% effort just to make sure that we're meeting your needs when it comes to savings. Because if you're going to save $8,400 or $10,000 over the life of the loan, why not shop? Why not work with someone that is willing to shop for you, that's willing to go through a harder process to get you a better deal? Now, let's move on to tip number 7, showing stability in your employment. This is really important. So when we're looking at income part of it, like I said, every mortgage is income, assets, and liabilities. When we look at the income part of it, and we see that you've been on your job for a while, and a while would the minimum would be 6 months, right? You've been at your job for 6 months, you've got that stability, and the 6-month rule is only if you had a gap in employment, okay? And right now the job market is strong, so we shouldn't see a lot of gaps in employment. However, if there is a gap in employment, you need to be back at work for at least 6 months. But having that job stability and strong employment is going to make the lender want to, count more of the income. When we average out income, we look at income in 2 different ways, okay? We look at the year-to-date income, okay, and look at how long you've been there, and we take that division. Let's just say it's $10,000 over 10 months. That's $1,000 a month. However, your salary or your hourly rate should actually equal out to $1,250. So when the underwriter's looking at, okay, 10 months, $10,000, $1,000, and on your job offer letter it says it's guaranteed X amount of hours, that's supposed to equal out to $1,250. What do you think the underwriter is going to use? They're going to use that $1,000 because that has a higher probability of continuing. So when you're going to apply for a loan, just make sure whatever those hours that you have to work, you're working them. When you provide the pay stub to your loan officer, you provide a loan officer with that pay stub that shows the full 40 hours. And you could do these division problems, right? You could easily do simple math and you can figure out, okay, well, maybe I need to pick up some overtime, pad that year-to-date income to get the stability to show the lender that I'm strong and I'm a good candidate for this loan. Tip number 8 is when you're looking at different mortgages, make sure you're comparing them, okay? Don't just look at this FHA loan and say, yeah, this is the one I want to go into, because there are certainly advantages to VA loan. You were in the military, thank you for your service. You're getting a lower monthly payment because you have an upfront funding fee. However, there's no monthly mortgage insurance on a VA loan. You can look at a conventional loan, which has a minimum of 3% down. So, don't believe in that myth that you have to have 20% down to get a conventional loan. Because that mortgage insurance can disappear after a certain period of time if you paid monthly mortgage insurance. You can do an upfront mortgage insurance, which is financed in one time. And with the higher interest rates, especially if you plan on refinancing, I would not advise that right now. And there's ways to kind of split it or even have the lender pay it by taking a little higher interest rate. So definitely look into all the different mortgage programs, weigh them all out, put them side by side and figure out what's best for you. Tip number 9, this is huge, right? You're getting ready to take in a huge obligation that you're going to have to live with for a certain period of time. Okay, so what's really key? How do I get my overall monthly payment down? Okay, let's just say you're used to paying $1,500 for rent right now, and you're getting ready to assume a $2,000 a month mortgage payment. That's a $500 difference. Well, if you paid down some debts, your debt to income ratio will improve. And if you pay it down prior to, during, or right at closing, well, the lender's going to take all of that into account and calculate your debt to income ratio better. And a better debt to income ratio typically means a better interest rate. Paying down those debts also is going to help you acclimate a little better when you get into the house. So a lot of these debts that I'm talking about are maybe a car payment that you took out 4.5 years ago. However, you took a 5-year car payment out. So if you only had like $3,000 left on the car that had a $700 a month auto payment, you could just completely wipe that out. And now you're walking into this house transaction knowing that, hey, you know what? I just paid off 7 months of $700 or $600 car payment, and I can go in here and kind of like reacclimate myself by paying this $500 extra. However, while I'm doing that, I'm going to put $200 aside just in case something happens. So paying off debt is definitely going to improve your chances of securing a bigger mortgage. And then finally, this is probably the hardest thing for everybody. Okay, tip number 10, being patient and persistent. Patience is a virtue. I learned this at a very, very young age. If you go into something right away without any research or, just jumping head in, a lot of times it could work out, but there are a lot of times that it could be a big mistake, okay? If you know that, hey, I'm getting ready to get my tax refund and I'm going to take that tax refund and I'm going to talk to David, I'm going to see the plan on how I can improve my credit score, all this other stuff, and you improve it and you know that you can get a better interest rate, why not go through the process, wait till the step is fully complete and then buy a house versus jumping head in with a lower credit score, taking a higher interest rate just to get a house. With that being said, these are the top 10 tips for success despite bad credit, and how you can use this for an FHA loan or any other loan, okay? If you have any other questions or concerns, my name is David Zai. I'm with the Zai Mortgage Team powered by Nexa Mortgage. I can be reached at 757-478-8493, and I'm just saying, give me a call.